Hi, welcome to Curious Bricks. Today we're going to talk about Bill.com, ticker symbol BILL, Q1 2021 earnings report. Bill.com went public in December 2019 and is currently a component company of Russell 1000 Index. The company's earnings call was hosted on November 5, 2020. Since this is our first time covering Bill.com, we'll start with a quick overview of what Bill.com does and how they make money. In our last video, we talked about INTU, which has some interesting history with Bill.com. Bill.com provides AR, accounts receivable, and AP, accounts payable software to small to medium businesses. This service is integrated into INTU's QuickBooks accounting software. In addition, the founder and CEO of Bill.com, René Lacerte, used to work as a product manager for INTU 20 years ago, and he sold his previous startup company PAYX to INTU in 2006. Now back to Bill.com. The company reported total revenue of $158 million in fiscal year 2020, and it is still growing rapidly. The company's revenue is structured into two segments, core and float. The core segment covers two groups. First group includes small to medium businesses and accounting firms customers, and second group covers financial institutions customers. Bill.com makes money through either subscription model or usage fee-based model. The float revenue is rather straightforward, which collects the interest on the funds owned by the customers. Before we dive into the financial details, let's take a quick look at some key statistics. As of November 20th, 2020, Bill.com share price is $109.90, and its market cap stands at $8.9 billion. Neither the trading price-earning ratio nor the dividend yield is available, as the company still reports negative EPS and does not pay out any dividend. Now, let's take a look at their latest quarterly financials. We will start with the income statement. In Q1 2021, Bill.com reported a total revenue of $46 million, which is 31% higher than the same quarter last year. The revenue growth is driven by the stronger growth from small to medium businesses and accounting firm customers. In this quarter, we are seeing Bill.com increase spend on our research and development, sales and marketing, and general administration. As a result, the company reported a net loss of $13 million, or a negative EPS of 16 cents. Now moving to the balance sheet. Bill.com maintained its cash on hand at $560 million from last quarter. Meanwhile, the company does not have any long-term debt on the book. In summary, the company's balance sheet looks quite healthy. In this quarter, the management provided the following key highlights. First, Bill.com demonstrated steady growth in this quarter. Total customers now grow past 100,000. Total network members amount to 2.5 million. A total of 6.5 million transactions were completed, and total payment volume approached $29 billion. Virtual card business is going strong, and the company brought the virtual card capability in-house, which would utilize AI to match the spend data with its own supplier database. In addition, Bill.com has recently signed new financial institution or FI partnership with KeyBank and Wells Fargo, which will further expand their growth through the FI channel. Lastly, the management announced that they have hired a new chief revenue officer to drive the company's future revenue growth, and added two new board members. One has strong payment background, and the other comes with solid branding experience. During the Q&A session, analysts were interested in the cross-border revenue target over the long term. While the current guidance stands at 25% of the company revenue, the company does anticipate this figure to go up to 40 to 50%. Analysts also ask several questions related to the current state of SMB. The company sees both number of transactions and TPV improve, but dollar per transaction remains a bit low. The company expects slower net new customer adds in the near term. Another question was asked regarding the profitability. Since the company's main focus is to grow the business, it will continue with heavy spend on R&D and sales marketing expenses to accelerate growth. Lastly, analysts were interested in the future strategy of the company, as there seems to be a lot of options for the company to explore. At this stage, the company will remain focused on its core AR and AP platform. It will work closely with existing FI partners to grow small and commercial customers. Now let's take a look at Bell.com stock performance before and after the earnings call. Bell.com reported revenue of $46 million, beat analyst expectation of $42 million, and its adjusted EPS of 4 cents loss also beat a consensus of 8 cents loss. However, the market had a quite negative reaction after the earnings release. Lastly, here is the latest summary of the analyst ratings of the company. In November, we see 2 new analysts started covering Bell.com, which brings to a total of 12 analysts covering this company. 5 out of the 12 analysts gave strong buy rating, while the others were almost evenly split between buy and hold. If you are interested in knowing more about this company, I recommend you conduct further analysis of the company's public filings. Thank you for watching this video. If you like this video, please subscribe to our channel.